Good morning, everybody, and thanks for joining us on this Friday morning for the Vietnam Capital Opportunities Fund results, which were announced yesterday. Hopefully, you've had time to digest them. We'll be joined this morning by the team from Vina Capital, new CIO Alex Hambley and co-portfolio manager Khan Vu, who you'll be familiar with, and they'll present their analysis of the results before we move to Q&A. As usual, please submit your questions via the Q&A button, and we'll answer these after the presentation. So with that, I think everyone's signed in. I will hand over to the team in Vietnam.
Good morning, and thank you for joining us for the annual results call for the financial year ended 30 June 2024. My name is Khan Vu. I'm the co-portfolio manager for the VOF fund, and I'm delighted to be joined today with Alex Hambley. Alex is a familiar face for some, and certainly for the team. You've been on the investment committee for VOF for the past 5 years. But before we get started, Alex, perhaps an introduction to yourself.
Yes, thank you, KV. I was appointed as CIO to the Vina Capital Group in August of this year. I've had a 30-year career, principally in private equity in the global markets. But in that time, I spent about 15 years looking at the Vietnam market. Originally, I came to Vietnam with Prudential, and I was CEO and CIO of their fund management business. And as you say, for the last 5 years, I've been on the VOF investment committee.
Thanks, Alex. And certainly, in the past 5 years, you've been involved in all the investment and divestment decisions, some of which we'll talk through some of those investments today. On the results call today, we're going to be covering 4 things. Number 1, performance. 2, the valuation adjustments. 3, the portfolio activities. And 4, the outlook. There'll be a section at the end of Q&A where we'll ask Mike Cocolari, our chief economist, to join us on the call. And there, you can ask questions around the fund, the strategy, the macro, the market. So, Alex, before we get started, fresh off the boat, new kid on the block, what's your view of Vina Capital, the fund, the team?
Well, let's start with the fund. I think this is a fund that is very well positioned to take advantage of the long-term opportunities in Vietnam. I think the strategy is right. I think the ability to invest either in public markets or private markets is really important. And I think operating to the principles of private equity, which allow navigation of complexity and illiquidity, is very important. As regards the platform, I think the fund is very fortunate to be managed by Vina Capital. I've known Don Lam since he set up Vina Capital. And since coming back in, I've been extremely impressed by what they've built. Deep sector knowledge, deep investment knowledge, and VOF is very well positioned on the platform to take advantage of those 20 years of investment experience. And then I think the last part of that jigsaw, if we say strategy is good, Vina Capital is good, the last part of what is important is the team. There are 15 investment professionals. I think you have said to me over 120 years combined experience. And it is a team that has deep experience investing in illiquid situations. So I think it is a team that is very well positioned to be able to take a long-term view of the companies in which we invest, and then more importantly, to be able to work with those companies to help create value.
Thanks, Alex, and thanks for articulating that. And that's really important. This fund has been around for over 20 years, over 200 investments that have been made. The team, that 120 years, is actually just within VOF, so let alone our experience outside, and what we bring to this fund, I think, is incredibly important. And so having you join the team as Group CIO full-time is going to be incredibly accretive to us.
And I think important to note that in that role as Group CIO, the majority of my time will be spent on VOF.
Absolutely. So turning to our performance this year, again, this has been a positive year for performance. The fund is up almost 8% in total return terms. Assets under management remain above $1 billion. And as shareholders, you've received almost 18% return on holding those shares over the past 12 months. Within that, we continue to return capital to shareholders. Dividends, that consistent dividend program continues. And the past 12 months, the fund has paid out 14.25 cents, representing about 2% of NAV, about 2.5% of the share price over that period. And I think that's important, that income that we return to our shareholders comes from the income from the quality names in the portfolio. And these are companies that we've invested in for a long period of time, some of which are private, now they've become public. And within that return profile this year, a lot of that return has actually come from the listed portfolio. Alex, before we sort of move into the longer term performance, as you can see here, when we talk about performance, not just over a short-term basis, but over a long-term basis, VOF continues to deliver. What are your thoughts of how we've been able to do that?
And thanks. And I think again, we go back to the strategy of the fund. It is taking long-term positions. So you can see this in the 5-year numbers. The ability of the fund to invest in companies when they represent good value, and the ability to take the time required to work with owners and management to build value in those companies is all part of what private equity is about. And you can see from these numbers how that flows through.
And I think what's important is that team of investment professionals that you talk about is we're very active, we're very involved. The art of private equity is the art of being active. And you will see, throughout some of these investments, as we talk about the valuation adjustments, some of the activities the team have done to go in to help turn around some of these situations. So within that return this year, there have been some key contributors to that performance. You can see in this slide here, real estate and financials remain the top sectors in the portfolio at about 20% each. Materials, information technology, and consumer discretionaries make up the top 5. And within that, over 70% of the portfolio is weighted towards those very important sectors that are benefiting from the growth of the domestic economy. Within those sectors, information technology has been the leading contributor to performance this year. And within that really is one company, FPT. And FPT has been a long-term holding of the fund. We've been invested into this company well before perhaps it's been on the radar of many institutional investors. Alex, we go on the road together and we talk to investors. They hold VOF, but invariably they will hold FPT. This is sort of a conversation perhaps 10 years ago. People might have companies like Vina Milk in the portfolio. Today, FPT is sort of the darling stock. Now, FPT is like, for those that cover other emerging markets, like an Infosys or HCL out of India. They do software outsourcing. 60% of their revenues come from software outsourcing. But importantly, an area of growth is going to be in this AI semiconductor space. And Alex, you've been involved in a lot of these conversations.
Yes, and one of the reasons why I like the FPT investment is because we've known the company a long time. The company is extremely well known to Vina Capital, and the company is very much poised to benefit from being a beneficiary from government policy. The government here is looking to develop domestic champions. It is looking to develop a semiconductor industry, and a group like FPT are very well positioned to take advantage of that.
Absolutely. And then, outside of FPT, has been a lead contributor. Another contributor is ACV, which is Airports Corporation of Vietnam. And this is, again, perhaps an investment that illustrates how we look at the opportunity sets here in Vietnam. ACV is a privatization. The government owns 22 of the 23 airports. It's a type of business that has a huge moat. It is benefiting from that post-pandemic recovery. But again, when we entered into this investment, I recall we went to see management. They gave us a 2-page prospectus that's written in Vietnamese. And so you can see that for many investors, Vietnam still presents a challenging market looking at opportunities.
Yeah, and a company like ACV or an investment like ACV, again, is one that I think we should be very proud of, in that it demonstrates the fund's ability to invest in earlier stage companies, to get invested before they become liquid, and to be able to help those companies grow and develop. So I think that's a very good example of an early stage investment that the fund has been able to make, in contrast to FPT, which is a company that is now liquid and mature, and we have the ability to go in and out of that when we see value. So I think both FPT and ACV represent good spectrums of what the strategy represents.
Thanks. Okay, so let's move on to talk about some of the valuation adjustments this year. This year, we're booking an evaluation adjustment representing 3.8% of NAV, about $49 million US. And that downward valuation adjustment reflects two really key causes. One, the state of current negotiations with some of the restructuring investments we've talked to investors in the past about, specifically around Norfolk or Novaland. And two, some of the business performance in the private equity investments that have experienced during the past 12 months. Within that $49 million adjustment, maybe we can highlight sort of three of the key areas, or three companies that have contributed to that. Number one is Novaland, and Novaland is a familiar investment that we've talked to investors over the past. We've seen adjustments back in 2022 when the real estate crisis hit. We've seen some adjustment in 2023, and again in 2024 at 30 June. This downward valuation adjustment, representing about 1.6% of NAV, reflects the status of discussions and agreements at 30 June. Fast forward the clock here, we're entering the last quarter of the year, things have progressed. It's important to recognize that we've actually recovered 50% of our investment costs in Novaland already. And our job as the manager, is to recover the remaining, the full expected return, and not just this valuation NAV, right, Alex?
Yeah, and I think one of the advantages of a private equity approach is that some of the investments that we make are structured and they carry some terms, and those terms allow us to be able to negotiate our ability to maximise the return we can make on the investment.
Right.
And that's particularly relevant with Novaland.
Yep. So, again, we will continue to update investors as progress is being made, as, for example, agreements are finalised, assets are swapped, collateral positioning packages are improved. The second adjustment to this year comes from In Holdings. In Holdings, again, is a familiar name perhaps to those who've been covering the portfolio. They run one of the largest convention businesses in the market. Last year, we helped them take on a very large portfolio of restaurants. That 12-month effort is still ongoing. The restructuring and rationalization around that is still ongoing. So the performance this year has been impacted, and that's why we've seen about a 1.2% adjustment in NAV from In Holdings. There is action plans happening.
Yep.
We have,
I think the team are quite involved in
Absolutely.
Pulling those together and helping management figure out how they're going to work through the issues they face.
That's right, and I think around that there are three key things we're working on. One is obviously that performance improvement plan, both at the convention business and importantly at the restaurant business as well. Two, we've identified and appointing new management for the F&B business, and that's going to help bring about a turnaround. And finally, three, we've already gone through a rationalization and a consolidation of some of the key stores and brands, and focusing on ones that are accretive. And the final thing is on Tukup International, which is a hospital in the north here. It's one of the two healthcare platforms in the portfolio. And again, the performance across the sector has been impacted. Healthcare has been a very exciting and interesting sector in terms of investments. But of course, performance this year across the sector has been impacted post-COVID. We saw this big surge in post-COVID on preventative healthcare, and after that, things have been normalising. It's still a great hospital.
Yeah, it is, and I think there's 2 points. There's two important things to remember here. First of all, it has been a successful investment for us. It's still sitting in positive territory. And as and when we liquidate this, there will be a market price for it. This is our best efforts to value the company, but these things are worth what people pay for them. And until we talk to people in the market, we don't know what it's worth.
Yeah,
and I think that's one of the issues with having private equity type investments in the portfolio.
I think there's a precedence to this as well. If you think about the Tree medical platform,
yes.
When we took on that, there were 4 hospitals. We rolled up and worked out a distress portfolio, and we have also bolted on new hospitals. Today, Tree represents, there's like 8 hospitals in that platform. Yeah. So, again, coming back to one of your themes about having the right team, the right management. Yes. With Tukup, we believe that our investment team with that deep experience in healthcare is able to work on this turnaround. And then finally, let's go into some of the portfolio activities. I think this is really important. Aside from just looking at restructuring efforts, a lot of activity has happened in the portfolio. In total, in aggregate, about $275 million of activity have been made, both in investments and divestments. Within that, we've divested about $200 million. Much of that money has gone into investing into some key holdings, including FPT. We've also increased our position in VP Bank. And importantly, some of that money is also in the form of return of capital to our investors through buybacks as well as to dividends. The selling has been part of our discipline, our sell discipline to trim holdings. Even though we have some great companies in the listed portfolio, the sell discipline is incredibly important. And Huafat, ACB, yes. Is all examples where they are approaching single stock limits. We are taking profit. We are taking profit into some of that share price strength. Post year end, we've made some investments as well, and we'll update investors subsequent to this in subsequent calls. But importantly, we've made an investment into Kiddo Group, a listed company. We've helped them acquire one of the leading steam buns private companies yes. in the market. It's an interesting story, steam buns. It doesn't sound like a great food, but if you go to dim sum on the Sunday in those steam bun wicker baskets, that's the kind of products that is. And it's a huge business here. The business that we acquired, Tofat, has 10,000 points of sale systems across the market, family-run business, Kiddo and ourselves coming in to institutionalize and grow and build out that business.
But I really like this deal because I think it reflects what the fund is trying to do. We have invested into a listed company, but we've been helping that company buy another business. Vina Capital and VOF have known Kiddo Group for many years.
20 years.
We've done a number of deals with them, all of which have been successful. And thirdly, although we're investing into a listed company here, the deal is effectively a private equity deal. And I think this is a classic Vietnam opportunity.
So, just to round off, the top 10 holdings this year, not many changes in that. The core holdings, the quality companies, those best companies and best ideas still reflect our top 10. Within that, as was mentioned earlier, FPT, ACV, ACB, they're big contributors to this year's performance, but the detractors are there as well, and these are the private equity investments that we continue to work through and turn around. Then, I just wanted to round off by looking at the return of capital. And I think this is a really distinguishing, unique feature of VOF to other Vietnam-focused funds. This past year, in that market volatility, as that discount widened out, we've been very active in the buybacks. This year, almost $50 million have been made in share buybacks. Importantly, the dividend continues. We've paid out $22 million in dividends this year, so that return of capital of over $65 million this year goes to our investors. We've just declared, as part of the release of the results, a dividend again for this half year. We've increased it slightly to 7.25 cents for our shareholders. And that's also meant that our discount has also narrowed somewhat. And this is an area that we continue to remain laser focused. 1, deliver on the performance and returns. 2, that return of capital. And 3, ensuring that that discount over time narrows and compresses. So thanks, Alex. And before we move on to the Q&A session, perhaps a quick comment around the outlook for 2025?
Yeah, for sure. So obviously I'm very positive on the long-term outlook for Vietnam. I've been investing here, as I've said, for a long time, and generally it's dangerous to bet against the market. But you have to be careful when you're investing. You have to look for the right opportunities, and nothing comes easily. This is why I believe in the private equity approach, and why I believe that you need to take a long-term view, which is why I think VOF is the strategy for VOF is very well positioned. So we have to be able to pick our way through this market nimbly, smartly. We need to be very thoughtful about the sort of opportunities we want to invest into. And one of the things that I'm working with you and the team on now is how do we think more creatively about generating pipeline of deals that we can then add to what is already a very successful portfolio. And I think that is a critical part of how we move forward. Already I'm encouraged that we're starting to see some very interesting deals coming through, but we're going to have to be careful and very thoughtful about how we diligence these companies, how we assess management, and how we think about deploying our capital.
Absolutely, and I think on that point of nimbleness, aside from the KDC investment we've made, we've also added some new positions to the listed equity portfolio, and as we continue to look at these opportunities in sectors like consumer, healthcare, education, these are the core sectors that still are driving the economy. In 12 months' time, let's hope that we can sit here and talk more about some of those new exciting opportunities. So for the next part of the Q&A session, I'm going to invite Mike Kokolari to join us. So if you have questions, please type them in. And if you have specific questions around the macro market, Mike's here to join us to cover that.
For the next part, I will be curating the questions and asking them. I'd remind you, you can ask questions on the Q&A button. These are visible to me and the hosts. I'm going to kick off with one for you, Alex. Following Andy's passing earlier in the year, what are your plans for team leadership and broadening of that base?
Yes, thank you for that. Just reflecting a little bit on Andy. I think as people are aware, I've known Andy probably longer than anybody else. I was working at Prudential when he came to Vietnam in 2003. We worked together there, and then I've worked with him for the last 5 years as a VOF IC member. In that time, obviously, developed a huge respect for him as a human being and his ability as an investor. Clearly, his passing has not been easy, but the way that we've been thinking about how we cope with that is really a reflection on two things. One is the Vina Capital platform, and the second thing is, as you asked there, Todd, around the team. There was a succession plan in place, which is the sort of succession plan that a platform such as Vina Capital has the depth and the resources to put in place. So we were fortunate that we were able to do that. And then as regards the team, I've come in as CIO, so there is some help and support that I can give them. And as I referenced earlier, the majority of my time as CIO is to work with the team. But what Andy built was a really, really strong team. We talked about that earlier. They've been together a long time. There's a lot of depth and experience in the team. It's a shared track record. I think some of the executives were with Andy right from the start. So the strategy there has been to work with helping the team step up and fill the role that Andy played. There are 15 executives, there are 6 directors, and there are 2 senior managing directors in Cannes and DP who have stepped up to take the leadership. So I am confident that this is a team that is able to step up and continue Andy's legacy, which was very focused on delivering performance for our investors. And I think the last point really there is the team has stayed together. There have been no senior leavers. And in my role with the team reporting to me is they are enthusiastic and committed to continuing the good work that Andy put in place.
Thanks very much, Alex. On that theme, can you give any examples of the depth in your team and the ability to help the recovery processes you're working on?
Sorry, could you say that again?
Some examples of the depth in the team that gives you the required resource to work out of the recovery situations you're in.
Yeah, so obviously we've got KV, who people are familiar with. DP, who is the co-portfolio manager, she was with Andy for 18 years. She leads the private equity team. But under her are 6 directors, all of whom have experience leading deals and making investments, but then B, and perhaps more importantly, as I referenced earlier, is working with the companies to try and help create value. In terms of examples, I think the area that I'm quite focused on, and KV and I are aligned on this, is sector focus. And I am extremely impressed with the deep knowledge that some of these directors have developed. And if you take healthcare as an example, we've talked about the hospitals. But it's not just the investments that we made, it's the knowledge of what deals have been done in the market to date, which have been good deals, and where we see the opportunities for the future.
Thank you. Dealing with the private equity theme, why has private equity been a headwind for you in the context of what was otherwise a very good year of performance?
Do you want to take that? Or?
Yeah, look, Todd, the how we manage the portfolio is across the spectrum, and we like to identify opportunities early on. Some of these opportunities do cross over and become publicly listed. And then other opportunities remain private, and there is an active involvement for us to work through these investments. This is one of those years where performance has been impacted a few of them, and specifically, as we illustrated earlier, around the hospital platform in the north, coming off a very good last year. The convention and F&B business, which is a turnaround story of taking on a very large portfolio and turning it around. Those are things I think are reflected in the efforts and the work that we do, and how it translates obviously to the evaluation exercise. That sort of is a process that we go through twice a year.
Can I add a comment to that? I mean, you referenced headwinds there, Todd, and I think we've been very clear with the strategy that we are backing management. And management don't always get everything right. And one of the key skills of this team is being able to work with management to help them realise that there are things that they could do better. And if we take the F&B chain as an example, I think management have got some things wrong. The management team that we backed would admit that there are certain things that they did that were perhaps, with hindsight, and hindsight is an easy thing, could have been done better. So that is a headwind. The key is whether you can manage that headwind. And what I'm particularly pleased to have seen over the last few months is how the VOF team have got involved in that company and helped management realise how they can better manage the business, help management accept that they needed to change some of their leadership, and accept the fact that we can bring in people who are better equipped to manage that business. So the headwinds come from us from all different directions. The key for us is being able to manage those headwinds, and I think this is going to be a good example of how we can show that we can do that.
Thank you. And following on from that, do the terms that you negotiate, and we've often talked about terms in client meetings, do these provide genuine protection? And if so, do you think that they are the key to the upside recovery?
Perhaps I'll start with that. I think the terms that we have, what at its core, it allows us to get back to the table and discuss with management whether we, one, to enforce those terms, or two, we negotiate an improvement plan. And without those terms, we are at the mercy of, say, the market, the mark-to-market. So indeed, those terms are an incredibly important part of how we view the process of negotiating, entering these investments, with the expectation that perhaps things may go wrong during this cycle, in the life cycle. But those terms allow us to get back to the table with the sponsor, to have an honest conversation, to work out a plan of recovery. And ultimately, the reason we do that is that we want to deliver a performance to our investors.
But can I add to that?
Please.
Your question, Todd, is do those terms work? And what I've seen since coming in over the last 3 months is in at least 2 or 3 examples that we have in the portfolio, yes, they do. If we hadn't had some of the terms that were negotiated at the outset, I think 1 or 2 of these investments may have been in more difficulty than they are. So in answer to your question, we've been looking to see, do they work? And I'm pleased to say that thus far, they would appear to be doing so.
Great. How do you see the pipeline of opportunities developing in private investments, and do you still need private equity to access the whole economy in Vietnam?
Can I take that? So obviously the pipeline's critical to a fund like VOF. And since coming in, I've been very focused on this. And I think there are a few areas that we can really work at. The number one for me is the Vina Capital platform, and making sure that we use the platform, we work the platform to give VOF the best view of the best opportunities in the country. Not just what the VOF team are seeing and doing, but what mobilizing the whole Vina Capital platform to generate a broad range of deal flow from which VOF can choose which deals it wants to do. So that's area number one. Area number two for me has been about working with the team to encourage the team to think more creatively about how do you make a private equity deal? How do you shape opportunity to give yourself the opportunity to participate in something where there is good value and a situation where you can help grow the business and, most importantly, achieve an exit. This, in my opinion, I think liquidity in Vietnam is improving, but it is still fundamentally a private equity market. And with a private equity approach, you ask about private equity, with the right mindset and with the right thought processes, you can start to create opportunities that are perhaps not immediately obvious if you're just simply a trader.
Thanks, that makes sense. I think moving on from the private markets now, a couple of questions on the real estate sector, which I'll roll into one. How are you playing this real estate sector recovery, and following the recent conviction of one or more real estate magnates pretty publicly causing turmoil, have you got exposure to any of those deals?
Maybe, Mike, you want to cover the sector and I can cover specifically that situation.
Yeah, as a general, one thing really that's very important to keep in mind is that the real estate sector in Vietnam is fundamentally healthy. And the reason I want to mention that is because often when this topic comes up, people will think, well, the real estate sector in China is having difficulties, and Vietnam, we read in the newspaper, so maybe there's something similar going on. So the first point I want to make before we get into the specifics is that the market here is very fundamentally healthy. The vacancy rate in Vietnam is less than 5%. That compares to around 25% in China. And basically, there is nowhere near enough real estate new housing units produced every year compared to the demand. Demand outstrips supply by a factor of something like 2 to 1. So there's fundamental strong demand for all the types of projects that we're invested in. And then I could hand it over to you to talk about the specifics of what's happened recently with the Milan and et cetera.
Thanks, Mike. What we've seen is transaction volumes, both in Hanoi and also down in Ho Chi Minh in the south here, increased dramatically. There is a significant demand for property. With regards to exposure to companies like Van Thien Phat, the fund has zero exposure to her, to the lady in question, and to her real estate company. Our portfolio really is around sort of three key holdings that we've had. One is the third largest holding in the portfolio, Kang Dinh Homes, a land and real estate developer here in the south. We've been invested in them for 17 years. Very high quality developer, very little debt. We have exposure to Dinh Homes, which is the largest real estate developer in the country. And then, of course, as we mentioned earlier, our exposure to Novaland, the second largest developer, through that structured investment, which we're restructuring, working through. So that really sort of concentrates the key exposures in the portfolio to the sector.
Thank you. And consumer, another big sector you mentioned that you're concentrating on. Perhaps one for Mike first, and then you can follow up with your exposures. But consumer seems to have been weak this year. And what do you see turning that round, and what will drive recovery and returns in the portfolio?
It's actually been for the last 2 years. Last year in 2023, the dynamic that was happening, there were two factors weighing on consumption. One is the layoffs of the FDI factories, and the second is the weakness in the real estate market, the topic we just talked about. Now, the layoffs of the FDI factory, that story is all done now because we have huge growth in both our exports and manufacturing this year. But the real estate market, although as Con mentioned, you've had pockets of activity really bubbling up, the overall market has still been hindered by various zoning and approvals issues. And because of that, even though real estate prices have not gone down, because of what I just mentioned before about this imbalance between the demand and supply, even though prices have not gone down, the sentiment in the market and then the spillover of the sentiment into general consumer sentiment has not really been positive. If you strip away the tourist arrivals in Vietnam, basically this year and last year, consumer spending by local Vietnamese consumers has only been growing around 2 or 3% a year. What we think will help it recover next year is the nascent recover in the real estate market, basically. As you see that start to pick up, the wealth effect should make people feel more confident. And also just the fact that, it's been depressed. You think about pushing a ball underwater, and then it's very easy to pop back out because there has been limited spending the last 2 years. And just the last thing I'll say on that is our research department, I believe, has really on top of this issue, and they've kind of zoomed in on this idea that the recovery is probably going to come in more discretionary type items first before consumer staples, because people have been holding back spending on consumer electronics, jewelry, stuff like that for the last 2 years. So maybe you could talk more about the portfolio company effect of all that.
Yeah, so if you think about consumers as a weight to the index, you sort of combine staples and discretionary together, it's about 13–15%. Which is an important component to the market. Within our portfolio, we have been underweight consumers if relative to the index. And at the moment, how we look at consumers, not necessarily is it just dairy companies or mobile phone companies. We think of consumers as sectors where there is a demand for and there's an increasing spending power. Healthcare is a really important aspect of that, education potentially. So for us, when we talk about consumers, it is quite a very holistic approach, and it is sort of looking at that rising middle income, that rising consumption that we're experiencing here in Vietnam. So for us, the last few months, post-year end, we've actually initiated a new position in a very large consumer company here in Vietnam called Mobile World. It's a company that we've been looking at for several years now. They've gone through several iterations. They are finally being able to prove that their convenience store and small format, modern store format is working. We expect them, that format to turn EBITDA positive this year. And we're seeing a really strong recovery in the earnings of Mobile World. And around that fundamentals, that team, we initiated a position in that. There are other things in the pipeline, of course. Alex, we in the team are looking around the sector, things like healthcare, things like education. And also obviously consumer, discretionary consumer staple businesses.
Thank you. Continuing the theme of listed, you referenced that you've got 14 listed stocks in the portfolio. Do you think that's the optimum number to benefit from potential market repricing? And if not, do you expect to increase public market participation?
So if you think about how our portfolio has changed over the years, pre-COVID, we had a lot of names in the listed equities portfolio, but we've really concentrated that down to a very high conviction portfolio of high quality companies within, champions within each of the sectors that we're looking at. At the moment, it went from 12 at the financial year end. Today it's 14. We are looking at several opportunities, what we call, leading companies within those sectors, some of which happen to be publicly listed. And we may initiate a few more names to add to the listed equities portfolio. But at its core, our strategy allows us to look across that spectrum to identify the best companies in the sectors in the market, whether they're public or private.
Yeah, it's an opportunities fund, Todd. And we're looking for the best opportunities that we can see. And as we said earlier, I think the strategy is fit for purpose because we have the ability to do both.
And right now it's a pretty good time to go into listed stocks. Mark is trading about 10 times PE. It's only traded once in the last decade at 10 times PE, which is during COVID. We're about a 25% discount to the rest of our Asian peers. You probably know we've had pretty sizable foreign outflows this year, partly because of what's going on with the dong, a little bit now that political situation is getting settled down. So I really would expect to have the inflows to come back next year. So this is probably an ideal time to buy listed.
Thanks. You answered the next question in anticipation, but I'm moving on to one. The obvious corollary of that is FTSE Russell are looking at upgrading Vietnam from Frontier to EM next year, strongly rumoured. How do you see that benefiting VOF, and how far off do you think MSCI are from doing the same thing?
So I've been in Vietnam for 15 years. I've been hearing about the MSCI for I think 10 of those years. The important thing is that the government has taken some proactive steps on the regulatory side to sort of align the functioning of the market more closely in line with international norms, getting rid of the need to pre-fund trades, et cetera, et cetera. Of course, when you look at the total AUM that follows both indices, MSCI is much, much bigger, of course. But the FTSE would be good in that it's a kind of good stepping stone towards getting to the MSCI. That will probably be next year. For FTSE, you really would probably need to see more progress on the foreign ownership limits. I think that's going to be the bigger sticking point there. Whereas for FTSE, there is more kind of operational issues and more minutia type things. So it will come eventually, and when it comes, we'll probably get something like 5-6 billion of inflows. And we've seen over and over when you see other markets, they've gone up about 50% in the run up to the getting into the MSCI EM. So clearly will benefit the portfolio.
Thank you. And continuing the sort of macro theme, Mike, could you give us an update on public spending and utilisation of the 2024 budget in Vietnam?
Yeah.
And particularly looking at infrastructure as a driver, perhaps to replace
export. So last year, there was a big pickup in infrastructure spending. We got up to, call it around 5% of GDP. So far this year, there's been some specific micro level issues. The intention to spend is there. There's just been some bottlenecks here and there that have popped up, and in the end, spending is down about 10% this year. We could very easily come back to being unchanged from last year by the end of the year. But keep in mind that, again, that we had a big pickup last year. The government has given some positive guidance to the market that it intends to have a further big increase in infrastructure spending next year. The things that we would care about at the immediate level is obviously the new airport for Ho Chi Minh City, the finishing off the north-south highway, ring roads. They start to talk about a longer-term project of high-speed rail. We'll see what happens with that. And then we see more focused on electricity. All those things will be good to help ensure that the FDI keeps flowing in. Not that it was at risk, but that makes the FDI investors feel encouragement. All that having been said, you do see guidance that there's an expectation that increased infrastructure spending can make up for I don't think exports are going to fall next year, but the growth will kind of flatten out next year as the U.S. economy comes into kind of a slow, soft landing. And that I'm not clear if another 20% or so surge in infrastructure spending would be enough to offset that. We'll see. What we really need is to get the consumer sentiment going again, the topic that we just talked about a few minutes ago.
Thanks, Mike. Unless there are any other burning issues that people want to ask, could I ask Khan and Alex to give us any last thoughts before we wrap up?
Do you want to go first and then I'll finish?
Yeah, I think to reiterate, the first question that came out in the Q&A, it's been a challenging year. We've lost a very good friend, a mentor and a leader. But the key is that the team is resilient and we're moving forward. And I think the focus for us this year is to deliver on that performance. We've obviously come out of a reporting season and evaluation adjustments, and the hard work now starts of being able to demonstrate that we can recover and return and perform to our investors. So that is really what we are laser focused on over the course of the next 12 months. And we do look forward to next year coming back to talking to our investors, really three things. One, an update and an improvement on those recoveries. Two, a set of investments that really demonstrate our strategy put to work. And three, out of that, a performance that is a reflection of that execution.
I think that's very well articulated. I don't have much to add. I'm obviously the new guy here and just enormously excited about the potential that there is both in the country with the Vina Capital platform and then specifically where the fund is sitting at the moment. And I think this is a great opportunity for us to move forward, doing things perhaps slightly differently, perhaps more creatively, and just to keep regenerating the key goal of performance for the fund.
I look forward to it. Well, with that, thank you very much, team, and thank you for joining us. The slides and recording will be available after this. And if you have any burning questions we haven't covered, please do get in touch. We'll be on the road this year, but hopefully we'll leave the team to manage the fund for a bit longer before we trouble them. But thank you for joining us, and see you again soon.